guys, welcome to the stream. I'm going to turn the camera on in a sec. I'm just going to post this in a few different places. Thought I'd hop on, so I'm just going to share this and then we'll have a look. What I've marked out here, guys, that is your Asian buy side, I believe, so that's important to me, and we'll talk a little bit about the markets in just a second. Alrighty, so how you going? Good morning, good morning, good morning. Alrighty, so pretty much today I thought we would hop on the charts, do a little bit of live market reading, what I'm looking at, what I would trade, maybe my thought process. Right now, if you have a look, so that is Asian buy side. And I'm going to get up the ES chart on this side too, so we can have a look at both. ES has already swept Asian buy side, keep that in mind. So maybe there could be some S&T. I don't know yet, but I'm just keeping that in mind if price shows us little signatures here. We are inside of macro too, right? So price can reverse during these key time frames. That's your Asian buy side. At the moment, S&T exists. And just so you know, when I'm looking at the charts, I go through different time frames still. Like I look at the 30 second, I look at the 1 minute, sometimes even the 15 second, just to see what price action's doing. And I'm going to start marking out different PD arrays. If we're bullish, we should be respecting bullish fair value gaps. That's what I'm going to say. So we should be respecting these if we're going to continue up. I think that's really important. Now, a lot of time trading is a waiting game. So you've got to kind of chill out and just wait to see what price is doing. If that inversed, so if I mark out this macro here, 350 to 410, it could be an interesting thing to look at. Just saying, if we inverse it. Again, that's Asian buy side, super close to that. We've driven up a few times into that as well. So that's what we're looking at. Want to join the group soon, I reckon, soon. Just reading the chat here as well. So I'm going to mark this out. Not letting me put any text at the moment, so I'll let it do its thing, but that could be your inversion fair value gap, just so you know. Now, what you want to see when price returns to this, one or two things. Either you just go straight through it, or, right, the better option, apart from that, is you might create like an order block in there. There's two options that you can use with, with price action. So keep that in mind. Usually if I'm trading, like when I'm doing the live market reading for the Discord, whatever it might be, it's a very similar thing to this. I'm just thinking out loud for you guys at the moment. So there's an inversion fair value gap. You could place that there. You want to see price disrespect that, then maybe dig back in, create an order block. And then it's nice and simple, my style of trading. You got to watch price though. Watch price, watch what it does. I'm going to mark out, so 0, 1, 2, 2.5. All that is just a standard deviation projection. So pretty much what I'm doing here, I've measured the last price swing. That's rate of liquidity. And here's the thing, like it does not matter. Even if price was to come up and sweep Asian buy side, you just look for an opportunity. It's not the end of the world. We're still in that macro time frame, which is what I like. That 2 to 2.5 lines up with this bullish gap, which I like. Now it's nice. Looks very clean, and then obviously got that sell side here as well. Now, one thing people ask me to, which I've had people ask me whether it's private message in the Discord or on YouTube, is do people have losing days? Do I have losing days? Yes. Do I have losing trades? Yes. Do I sometimes lose 2 in a row? Yes. It's a matter of risk management. And if you're in my Discord, right, the thing that I posted before about the impulsive move down, just have a look, see if it happens. See if it happens here. That's what you want, right? You want these little, these little price signatures. These little price signatures, that's what you're looking for. So I wish I could mark this out. There we go. So I'm going to zoom into a little bit easier to see. So technically, like the London Open session, guys, it still goes until 5 o'clock in the morning. So anytime from 2 o'clock till 5 o'clock is viable if you're looking for a kill zone. You can trade outside of that by all means, which is fine. Good afternoon, good afternoon. Now in the previous time frames, I know some people on my Discord took this short, really nice one there. I personally took this short here as well. Really nice trade, that one. Macro phrased, of course. So in my Discord, if you're here from my Discord, let me know. If you're here from YouTube, obviously here from YouTube, or from Telegram, that's fine. But yeah, just keep those little things in mind. So I'm going to post this actually. We'll share this now. So there's a lot of waiting. I'm a night trader, not a day trader. Good morning from South Africa. How did you place that fib, Ruben? Why not use the wicks? So, all right. So when you place the Fibonacci for, when you place the Fibonacci for, not working for me, but when you place it for OTE, use the wicks. When you place it for a standard deviation projection, use the bodies. So what you do is you use the bodies of the last sweep of liquidity. So for example, you could grab this last sweep and then you could do a similar thing, project that up. Now it doesn't work all the time, but if you are looking at a trade and then there's something that lines up with 2 to 2.5, it's a spot where the market can reverse or retrace. And then usually if you extend this even further, so if I went 3 and 4, usually 4 is like the max distribution, right? And they like the levels that you can take profit at. Other key levels are, imbalances, liquidity, fair value gaps, as we talked about. So hopefully that makes sense in terms of what I personally do or how I do it. I took 2 hours today, ignore bearish 60 and original consolidation in Q. Low probability event anyway, so I told you before. Yeah, these things happen. Here we just kept going up. That's the thing. So I mean, price just kept going up and up and up and up. All of Asian session. So we had a massive 15-minute imbalance to fill. And then all of Asian session we just worked up, apart from that big drop. Up. It reminds me kind of like a news event. It was quite an aggressive move. And then even here, realistically, we just accumulated and moved up. That's all low resistance liquidity, so I'd expect that to be swept. And then we did sweep that to the tick. And you can see that. Notice how the bodies of these candles, they're respecting that zone, which is important. And something that might be good, you know what I mean, when you're taking trades is, so if you get caught up in chop, whether it's here or maybe here, whatever it was, just stand back for a bit, because there's always going to be another trade, you know what I mean? If you trade during macros, there's going to be another trade always. Every single hour. Every hour. All the way from here, they're all opportunities if you see something in price action to take advantage of, I suppose, is the best way to put it. And for me personally, I don't really look at Dixie. So I think someone in my Discord might have asked me that too. So that's pretty interesting too. Now, what I'll be watching here, this is what I'll be thinking, right? If you're looking at a trade here, I would then, you know how we talked about the OTE, I'll be looking at this range here. I'll be marking out OTE. If we don't respect that, then obviously Asian buy side is the next draw. I'll mark out this. That's what I'll mark out. If we close above, then I assume we're going to sweep Asian buy side. That's what I'll do. How you going, James? Hi, Sheet. They'll be in range with all the rest. So I will be having a discount. I'll probably release that tonight. Most people charge a few $100. That's what it'll be, roughly around that price. But there will be a discount for the first couple of people. Or if you're on my Discord watching this as well. Right, so keep that in mind too. There's enough on YouTube, right? If you watch all my YouTube videos, there's enough there. But if it's something you're interested in, it's always an option. Ahmed, in terms of Apex, holding on to trades isn't always the best. Depends what session you're trading, you know what I mean? So if you're trading the London session, for me personally, I only aim for 10 to 20 handles. That's pretty much it. You know, this trade here, I think I entered roughly about here, and it was maybe about 17, 16. So nothing too crazy. Nothing too crazy. If you hold on too much, then obviously trailing drawdown can be an issue. But it depends. If you're closing early, like for example, if you're in like if you're in a short position here and then you're closing here instead of holding, then I'd reduce my risk. Because realistically, the only two reasons why you're closing, you're not comfortable or you're not confident in the trade. That's kind of the way I see it. There's really only two reasons why. Will I be looking to do a full breakdown of the market maker? You know, well, that's possible. That's definitely possible. A market maker sell model, buy model. You know what, guys? For a market maker model, I myself keep it nice and simplistic. So I'm looking for accumulation pockets. And I will make a video on this one up, but I'm looking for accumulation pockets. You're looking for those pockets to be around key time frames. You know, around Asian liquidity, if you trade in New York session, London liquidity, and then that's your target. That's the first thing. You need that there. Let's assume, right, we might even have accumulation here. But let's assume you had price action like this. Then price goes up like this. This smart money reversal happens in a key time. That's what it is. After ideally sweeping liquidity, that's all it is. So maybe you get to the price, it's silver bullet, 250 or something. Then price shows you what you need to see, and you see, you know, like a market structure shift or something, and then a return to a fair value gap. It's a high probability trade. And the market maker model, any of this accumulation you'll be targeting. So that you could target, you could also target that. Now on the way down, so the thing is, it's not always the case where on the way down you've got the first and then the second stage. It's not always the case. The second obviously is most of the time more abrupt, but it won't always happen like that. It won't always happen. It's up to kind of the discretion of the trader how they manage that. I think it's important to keep in mind when you're looking at price action. So that's what I personally say. Sometimes it'll just have one accumulation pocket. Sometimes it'll be quite messy. And what is accumulation? Sometimes that can be up to your discretion depending on who is actually defining the accumulation. I think it's really important to keep in mind. Does my strategy work with Forex? So I believe so. I haven't personally tested it. I haven't really looked at Forex lately, but when I have looked at it in the past, or I've gone back to like my old screenshots when I used to trade Forex, it definitely did apply there. Futures is where it's at though now these days. So I'll probably post something in the community tab. So anything new, I'll probably post in the community tab. anything to do with the Discord or whatnot, I'll post there. We may as well just sweep this high. It makes sense now. Like, we might as well just take it since it disrespected the OTE. Let's go back to the 1 minute on ES chart, and we'll have these two charts side by side. Interesting. Very interesting, very interesting. So realistically, with what's happened in price action today, it's not typical, in my opinion, that price do something like this for the Asian session. It's not typical, right? So realistically, Asian session started up here, and then we pushed down, we swept liquidity, and now we're kind of like making that back up. Very choppy, but very choppy. We expand a little bit here too, which is fine. As we're kind of watching price, if you guys have any questions, feel free to post them into the actual into the chat, and I'll have a bit of a look. I'm just looking at the two screens. If you may ask, so I'm going to get to these questions. Give us a sec. How do you manage your risk for a 20 handle profit, and what do you go to time frame? So my two main time frames are probably the 15 minute and the 1 minute chart. It's honestly all you need. You might disagree, but for me, I've found what works for me is the 15 minute and the 1 minute chart. 15 minute I use for imbalances or like time-based liquidity. The issue with what we've got now going on here is that it really looks like we're pushing up, right? And we'll talk about this. That's like a rejection block. But yeah, 15 minute for imbalances. So let's just say, you know, for example, there's a particular day, or even if you trade in the New York session, doesn't really matter. Watching how price reacts in these zones is important. You know, so if you're looking to take a trade here, you sweep liquidity, tap into imbalance, and then during the macro 11.50 to 12.10, maybe look for a short. So I like to use the 15 minute for imbalances. So I have this imbalance marked out here, and also for like any PD rates, so like order blocks or rejection blocks or inversion fair value gaps. That's important too. And then the 1 minute, right? The 1 minute time frame. If I'm just reading that question. The 1 minute time frame is for the entries. So all I need is a macro, a 15 minute time frame, and the entry. That's it. So for example, a couple of people on Discord have caught this trade here using like an inversion fair value gap right here. This one that I took, S&T at the highs, Nasdaq making lower highs, ES making high highs, and then we inverse this fair value gap here. Target was the low hanging fruit. This trade here was almost 20 handles. So to also target that question that you're asking me too, my entry was here, right? A little bit late to the party, but sometimes you can tell that the market's going to really, really push. Stop loss above that high. I believe it was somewhere around there, and the TP was exactly at that low. So it's about 17.5 handles. So in this trade, once like price pushed down here, if I just have a look, once price pushed down to like here, stop loss was still as is. I think I moved it maybe above here. When price did this, break even. There's no point having risk on because we displaced lower. There's no point having risk on there. And obviously the TP got hit, price reversed back up. And then now we're kind of pushing for that buy side. Super close, right? We swept the volume bodies, which is fair enough too. But that's how I manage it. So like, I don't really do fixed for any of my trades. There's no real fixed, TP. There's no real fixed TP. Usually it's 10 handles, but sometimes I'll go for a little bit more depending on what price action show me. Or in this case, there's only one contract because I wanted to return to the fair value gap. Didn't happen. So I had to wait. And I won't really do anything like, go to break even at 1-to-1 or anything like that. I'll just keep it. Depends what price action show me, because I'd probably say I'm more of a discretionary trader. I'm not going to just hold all the way to this fair value gap if price looks like it's going to reverse. I'll cut the trade, or I'll take some partials. And in terms of the units, right? When I'm talking about handles, or someone's talking about handles, for example, I'm just talking about the movement on the side here. So if you say you marked out, I don't know, 20,030, and if you go to 20,020, that's 10 handles. So that's what I typically aim for around this area. And obviously you can see it starts to expand as time goes on. Price starts to expand just a little bit. So I'm just going to mark some of these things out. So a 30-second time frame. That's right, no worries. And for the stream, yeah, so these will pop up. These will pop up every now and again. I was going to do a zoom. But I just kind of decided instead we'll have a stream. So there's a lot of waiting, with trading, a lot of waiting. And it depends what you have access to. If you have access to the 1 minute, realistically, all you see is this. And all you see is this fair value gap here, that's it. You don't really have anything else to look at. So I'd keep that in mind. I haven't really watched Fresh on the Fit, to be honest with you. I haven't really watched it. I don't watch too much TV. A little bit of Netflix now and again, but more like documentaries. So don't really watch too much. YouTube a little bit. Actually, you know what? I've probably seen Fresh and Fit on like YouTube Shorts. Now, while that does its thing, let's talk about price action in the past, right? So we'll make this almost like a masterclass, and we'll let price do its thing. Now, the start of London Open session was about here, right? So 2 o'clock, right here, that's what we're looking at. That's the start. Now, that's not tradable. It's not tradable. There's nothing really here that you can take advantage of. So you're wanting any bullish fair value gap, especially big ones, to be respected. If you're going to continue moving up, you should respect it. But what do we do instead? We disrespect it. That is the first sign, right? I'm going to mark all this out too. That's the first sign. Have a look. Now, with this, we sweep buy side liquidity here. We come down, we technically have like a little bit of a shift, but the shift happens down here. So the reason why I personally like using inversion fair value gaps now is because of the fact that a lot of the time you're not going to get a market structure shift, and it's going to be too late before you actually can enter the trade. That's important, right? So realistically here, There's a swing low here, there's a swing low there, but a lot of people aren't going to class a shift until right here. Now, is it too late to enter from this imbalance here? Probably not. Like, you could enter again or just retrace back again. But what I always like to do is when I'm looking at price swings, if that's like the target, and this is all like your low resistance liquidity, if I was to mark that out, that's what I refer to as like LRL, or low resistance liquidity. Now, if that's your target and that's where you're sitting, or that's your swing high, I like to grab a fib just from the low to the high. And then what I do is this. I mark out the 0.5 level. Anything above 0.5, in my opinion, is still valid. It's still viable to trade. Anything for a short in this zone, and I'll make this a bit lighter, that is completely still valid, right? Still valid. So anything up there, valid, right? We'll make that green. Anything down here, not ideal. As you get lower and lower in the move, guys, the probability just goes down and down and down. As you get higher in that dealing range, the probability goes up and up and up. So if that's your draw because of all this trendline liquidity, we dig above equilibrium here, and this is where you got to understand premium discount too, right? Into that civvy, into that sell side imbalance. You can go short from there, or you can wait until price rejects and then have a really tight stop, because price should need to rebalance that again. We've rejected from an imbalance. Then you probably be stopped out. You get me? So entering lower in the move, it's more risky, or you just got to take partials. We dig back up again into this zone of premium. Anywhere up here again is a good idea to go short above equilibrium, and you take profits at the low hanging fruit. But you got to be willing to take advantage of more trades. You have to, because if you risk too much on one trade, then you're in trouble. Like if, I don't know, say you're with Apex, like I use Apex personally, right? Even Top Step. If you risk 1% per trade in Top Step, that's 2, you're done, right? You're done. I allow myself always 3 trades. Ideally, I want to get in the first trade. Everyone does, but it doesn't always happen. How do I allow myself to do that? I mitigate my stops. As price is working in my direction, I think to myself, should price do this? Should price do that? And if I think price shouldn't do something, then I'll move my stop loss. So for example, like if you're in this trade and you're wanting to go to these lows and you see price do this, I'll definitely trail my stop into profit. Like if you entered up here, maybe you're in with one contract, you took a partial, one contract, stop in profit, stop that in profit, that's fine. Right? So when you're demanding a bit too much from the markets, it can be quite interesting. And ask yourself how you'd feel in that situation here, watching price action, right? We'll talk about this in a second. So realistically here, discount premium applies to that range. That's really important. And I use that a lot. I also use the OTE range too. So if I was to, mark out the OTE, and I'll just change that actually. It's somewhere up here, right? Somewhere up here. So I'll be looking at that. We dig back into OTE, opportunity to go short. Also in a macro, beautiful. We come back down, sweep the sell side. It's not random that we sweep that one and react. That's the sell side. That's the bottom of all this low resistance liquidity. So all of this, if I was to mark it out, that's all your low resistance. It's like a channel, low resistance liquidity. So keep it nice and simple. We sweep liquidity. We invert that fair value gap. Now here's the thing, is there a market structure shift yet? There's not. There's no shift. There's nothing yet. So if you're waiting for a market structure shift, and this is why I made the video on advanced market structure shift, you don't always get it. You won't always get it. Up here you wouldn't get it, you'd get no return. Here you'd get no return, here you'd also get no return. You do get an advanced shift in structure though, where you've now broken past, right, these two up close candles. And we drop back down, perfectly respecting that busy, push back up. But there's always opportunities in the market, right? Always opportunities. Now, from there, this high and this high. Too clean. right? Too clean. So we work to take that out. Price digs back down. Where do we dig back down into? This bullish fair value gap, which we use again. We use that again, right? We dig back down, we push up. We dig back down, we push up. And sometimes these price movements are going to be quite aggressive, is what I should say. You won't always get price through this. Sometimes you're going to have price be really aggressive and dig really deep down back into those imbalances there. And yeah, Belmont, in terms of a 15 second, I don't mind the 15 second, right, when I'm looking at price action. If I ever look at price action closer to New York session, I like it. I think it's really nice. And David, the 122 down here somewhere, I'm assuming. Minute five. Let's hop on the minute 5 chart. So this is what we're looking at, right? This is what we're looking at. And somewhere here, I'm assuming. Yeah, for me, in terms of longs, because I'm not saying it can't go higher because it can, but for me, we're too high up in the range. We're too high up in the range for me to take longs. One could take long. Here's a turtle sweep of external. Then no market structure standard, but high risk in my opinion. Yeah, you got to pair everything with time. That's important. You got to pair things with time. When you're outside of macros or outside of key time frames, the probability obviously goes down. So that's interesting. And price will do its thing, right? Price will do its thing. This is quite messy here. This is nice because we actually opened up a bit. And that's decent too. But now, nah. Price is doing its thing. And that high is just right there that we've swept, which is interesting. And then obviously you can compare this to ES. But that's discount and premium. Big part of how I trade. You could call that a dealing range now. You could get a bigger range from this high to this low. You could get a bigger range from this high to this low. You could get bigger ranges depending on what you're looking at, or what you're looking for. So it should be, the Discord link should be in my, in all my videos, I think. So it'll be in all the videos. I'll post in the community tab again. I'll post the link to the page in a second. So in these situations, you're best just chilling out. When price is doing this kind of thing, chill out, relax. Go back and review what's happened in price action. Hopefully that all makes sense. Reading the different price swings, right? Up, down, up, down. No, I haven't heard of Stacy. I'm always open to linking up with Australian traders because there's not many. There's honestly not many. There's a lot of people from America that trade like the New York session. SMT. So I'm just going to mark a few things out. The issue with this is that we're sitting in this bullish gap. That's the risky thing about this. That's the risky thing. Melbourne, yeah, interesting. I'm from New South Wales. Wollongong is probably the easiest way to explain it. If you're not from Australia, Sydney is probably the easiest way to explain it. That's what I'd say. No, I'm just watching on the 1 minute now, but I'm just curious about this fair value gap right here. If we inverse that, I think we're taking out these lows. So I just, every time I'm watching, so the thing is here, we do have SMT these highs because Asian buy side highs, the actual wick. We've taken out the bodies, but the actual wick here, I mean the relative equal highs, ES has taken out those highs, NASDAQ hasn't. So the SMT at the larger price point, if we hop up here, because Asian highs are like here. Oh, wait, sorry, here. So there's massive SMT, higher highs here, lower highs or equal highs for the NASDAQ. And then there's also SMT on this lower time frame with the rate of liquidity. So what you'd need to do is you need to obviously break past this zone, because what I'm watching price do, like I'm using this as like now a new range from this low to this high. We're below equilibrium, but I think we're probably seeing an OTE. So we need to break past OTE is what I'm saying. And then similar to up here, when price pushed up here, when we disrespected OTE, we're probably going to sweep the high. If we disrespect OTE, then I expect to sweep the low. If we don't, then we could pull back and continue to push higher. But this would be tricky to enter from, because realistically, I mean, you could have something like this, and your stop could go above the SMT high. If you're aiming for 10 handles, I mean, happy days for you. You might ask if I'd be concerned if it's a 1-to-1. Not really. It'd probably more be like a partial. Sometimes 10 handles might be a 1-to-1. Other times, you know, saying this situation, someone in my Discord might have done something like this, I'm assuming. 10 handles. If you're going for 10, is like a 1-to-1.2. Here, 10 handles for me, 1-to-1.1. Sometimes you'll have 10 handles with a stop loss will be, you know, something like this. Often if you're trading, you know, around the 2 o'clock to 3 o'clock time frame, that's when your 10 handles will be like risk to reward a bit greater. But for me, I use consistent contract sizes. So for me, 2 to 3 contracts is sufficient. 1 sometimes, like today. I wouldn't, you know, just go, oh, I've got a small stop loss, I'm going to do 6 or 7. No, it wouldn't happen like that for me. So for me, risk to reward isn't really that important, because as long as I'm targeting nearby liquidity, it's more about aiming for the same or similar amounts per session, per day. I want to see, like, if we're going to move low, ideally, we want to respect these zones here. If we push back up, we're not as bearish as we could be. These are thoughts that I probably have in my head usually, but I'm just kind of just speaking them out loud for now. This is what I'll be thinking. I'll be thinking I would rather see price react from here, accumulate and expand down, as opposed to dig all the way back up, because then I'll be disrespecting this busy, this civvy here, I'll be disrespecting things. So ideally that's what I'd rather see. So if say I take a trade and the first one's a loss, last week for example, I took 2 losses on one of my accounts, and then the third one was a win. But those 2 losses were smaller. So for example, let's assume this just blows through the roof and just continues this uptrend. Here, the stop loss, in my opinion, like say you entered short from here, the stop loss should be able to be mitigated by now. So instead of maybe having your stop here or having your stop here, you should be able to mitigate it. Because if your stop gets hit, we're disrespecting 3 PD rates. So 2 losses, for example, or 1 loss at 2 contracts, I'll keep it the same. For me, I'm looking at the type of setup, the nature of the setup. Is it an A+ setup? Is it an A setup? Is it something that I'm kind of sitting on the fence for? That'll determine kind of how many contracts I'm in with. But a stock standard amount for me will be 2. That's only for London session though. So if you're a New York trader or you trade later on, 2 is way too many. Way too many. Especially with the stop loss size that you need for the New York session. So I don't really do that because it does mess up the probability distribution in my opinion. As long as you can control yourself, right? Because let's say you go with, 3 contracts and you're like, all right, I need to half my risk. Well, you can't half your risk in futures. So maybe you do 1 contract. You're taking a loss now with 3 contracts, which, potentially, let's assume you took this trade here. Right? It's going to be a little bit of money. And then maybe it's a couple $100. And then you go in with 1 contract, you aim for your regular 10 handles. 1 or 2 things is probably going to happen. Number 1, you're going to feel like you need to get more, and then you might not make that money. Or number 2, you might make money back, but then you've messed up the probability distribution because then you're still going to be down on the day, which is nothing wrong with that. There's nothing wrong with that, but I feel if you risk a similar amount and you mitigate your stops while you're in those trades, you can take 2-3 trades and you still be under 0.5% loss for the day. I think it's important. So that's what I do. I used to reduce it. I used to go, I'll half the risk now when I was trading indices because I used to use magic keys. You could put in, 0 point this or 0 point that, but with futures, since, the whole contract sizes, that's what I do. Not saying you should do that, but that's what I do. Alrighty. So just watching price accumulate now. I would prefer, like I said, I prefer if we expand. Like I said. You might ask, well, when do you want breakaway gaps to form? If we expand down, I want a breakaway gap here and here. If we expand down and sweep that low, you'd expect that, right? And then you expect price to move aggressively. That's what you want. So when people go on about, whoever it might be, I'm not going to name any names, but when people say, oh, I want big candles coming, it's to do with situations like this. Or when you have low resistance liquidity, you expect price to be quite aggressive. It's an expectation, doesn't have to happen though. Nothing in the markets, in my opinion, is 100%. It doesn't matter how good the strategy is, doesn't matter how good the macro strategy is, you're not going to get 100% win rate. No one is. You might get 100% for 3 days, 4 days, 5 days, 10 days, maybe on a winning streak potentially, but it doesn't last forever, right? So it's just a matter of seeing what things happen more than not, and then you build like a model off those things. Am I using the power of 3? In this situation, no, but in normal situations, yes. I do like the power of 3. I think it's a very, very good concept. Probably better or just as equal as like the market maker models. The market maker models, it kind of can be a power of 3 in a sense, So if you understand the power of 3, the market maker model, if you simplify it back to the bones of what it is, it's very similar, in terms of you both have that accumulation period, and then you're looking for price to go one way as the due to swing, and then come back in the other way as well. So I want to see what happens in this next macro. So let's go 450. Let's go 510. If you're from Australia, obviously right now it's probably 6, 7, 5 o'clock, somewhere around there. So I'm an ICT. I'm an ICT trader. So I focus primarily on macros. 10 minutes before, 10 minutes after every hour. Will I take trades outside of that? Yes, but it's all based on the previous macro. That's what this whole thing's about. Whether you're in my Discord watching me and you ask me questions, it's all about using macros that have happened before or in the macro to take the trade, because the price should do something important. It's not always going to run. It's not always going to run for liquidity. It doesn't have to, but you can use what's happened in the previous macro to phrase a trade to the next macro, or even liquidity. Liquidity, you can use that. You know what I mean? So yeah, as you're watching, guys, if you've got questions, post them in. And then this here is going to be interesting too. I'm very curious about how this works. Again, I mentioned that OTE range. That's the OTE range. It's quite interesting. Price moves from discount to premium. So anytime I'm in a trade, so when I was in this short trade here, going short, when price goes back down into equilibrium, down into OT like this, I'm definitely reducing my stop. Definitely, because there's always a chance price reverses from that point. That's important. And I'll post something here about my Discord. Macro is coming up in about 5 minutes here. So just before the macro, just have a look. All right. So let me know as well, how's the audio on this stream, the audio and the visuals for you? Let me know. $450, $510, last macro of the London Open session. Pretty good, decent. Yeah, so anyone from Australia here as well, if you're thinking to yourself, like, do you need to trade the New York session? You don't. I reckon New York session is easier to trade, I will admit that, because there's more volume. So there's many traders there that go for 10-point moves in New York session. That's like very quick. London session, I believe you need more skill for London session, only because the price segments, you've got to be involved in the movement for a longer period of time to get the same amount of handles. And at the moment, no. So it's just a paid. I do with the Telegram, where I'll post all the chart snapshots and post some things in there. Twitter, I do have a Twitter, which is just full view trading. And that's there. I've thought about that, but I want to kind of keep it exclusive, and hopefully you guys understand that, only because I don't want to put too many people in there that don't want to, don't want to learn. I'm not saying that just because you pay, you don't want to learn, but just from other people that have started their own Discords, they've had issues with, too many people joining in, and then there's not enough room for people to discuss things because it might be too hectic in the Discord. So that's kind of my thought process on that. If I wanted to join premium, do you mean like a link in the Discord to join premium? Is that what you're talking about? Let me know what you're referring to there. Oh, just you said just asking if you have one to join the premium easier. I mean, usually it's all I think it's all on the page there, but I could create a link that just goes directly to that, to that premium, if that's what you mean. That could definitely be done. Yeah. For me, it doesn't matter, to be honest. So like I will take trades anytime from 12:50 onwards, even before London Open session, because 12:50 is the first macro of interest for me. So for me personally, yeah, like I'll take a trade 10 minutes after. I'll take a trade, like depending on what price wants to do. If you observe price over the last few weeks, even have a look in this time frame here. Just because it's outside of a kill zone doesn't mean you can't trade it, in my opinion. But you've got to have a framework, and that's where the macros for me comes in, because I can be looking at that and seeing if price wants to do anything in those key time frames. Yeah, so I'll probably post it on both YouTube and Telegram. So anything relating to the Discord or whatnot, I'll post that into the YouTube channel and the Telegram as well. YouTube channel, I'll talk about it in the community tab, so that'll kind of be posted there, which should be sweet. So macro has just started. I don't mind that as forming like low resistance on the sell side there. So I'm going to mark some things out. Don't mind that at all. Let me just show you like a 30-second time frame, guys. And then even like a 15, just for the actual the concepts. Now what you'd want, relative equalize, you'd want price to aggressively move now. That's what you want. You don't want price to return up here. That should be a breakaway gap. So if you're going to trade, you trail your stop loss. Where do you trail it to? Above this high now, in my opinion, which would be more than in profit, because if you entered here from the inversion, you'd be more in profit. That is when I'd probably consider that a breakaway if we raid the next swing low. So I don't know exactly when they're going to form, but when you see something like this, you'd want that to form a breakaway. And all a breakaway is, it's a fair value gap that doesn't get returned to, and then you sweep liquidity in return. Here, you return to an inversion fair value gap, and you return into a CB. You've done that just before the macro, and then the start of the macro, I mean, it kind of, so far, it's doing what it's meant to do. It's doing what it's meant to do. Not live execution, just kind of live market reading at the moment. And this is the 450 to 510 macro. So you gotta have patience, and then these are the sell side targets, just so you know. Now you might say, well, where do I take targets or where do I take profits? Any of these lows is viable. And we can talk about how you could get into this trade here just before the macro too. Now that's on the 30-second. I'm going to go to the 1 minute time frame. And then I'm going to go back to the 30-second. Just so you can see. All right. Have a look. Does that look very, impulsive to the upside. Not really, right? That is a different story. And again, this is the macro right here. So some macros expand. This is an example of that, right? This is an example of that. It's also like a pivot, as you can see. Smaller time frames, nothing really there. So realistically, this would be something, right? This would be something where you could use more advanced concepts. So it wouldn't be like a market structure shift return. It'd be more, okay, maybe you want to hold a trade a little bit longer. You can enter a trade here as the price pulls back. I'm not saying enter straight away. You could wait for another confirmation. What could that confirmation be? When these up close candles are broken to the downside, that indicates like a change in the state of delivery. If you want to pyramid in, but if you don't want to pyramid in, you don't have to. You just expect that to be quite aggressive, like I was mentioning. Then you take out all these sell side targets, which is fine. And then now, this is what I'll be doing here. I'll be grabbing this whole range from this low to this high, and I'd mark out OTE from that range. That's what I'd do. I just see what price does in that range, how we react in that zone. Is there anything here to react from would be probably important, right? So that there, I'll just mark this out. I'll make it fairly big. We'll go 4:50 a.m. and we'll go 5:10. Just as food for thought, right? Food for thought. I think it's about 20 handles, give or take. Shorting from here, you probably get 10 handles right there. Partial, go to break even. Almost get stopped out. Continue. So this is all you really need. You need the 1 minute macros and then the 15-minute time frame. And then seeing things repeat. So you get confident with, with going, okay, I want this to happen with price action. I think it's really important to keep in mind. Again, just watch how price reacts in OTE. Like we reacted here in OTE, but not aggressively. If you start aggressively moving up and inversing fair value gaps, then I'd assume we're going to take the highs. If you do something similar to this, then I'll be looking from this high to this low, OTE, middle of this fair value gap to see how we react there, and then maybe we continue down. So you don't have to predict, but you just got to react to what price is giving you at that current time. And this, like if your tape reading or your market reading is just as valuable, it's just as valuable, you know what I mean? Record yourself, add it into your journal. Things like these are important to add into your journal too, because then you see things repeat. Back testing isn't the same. Back testing is probably like the lowest form of seeing things repeat. It's quick because you can go back. Then you've got this. Then you've got maybe actually trading. You've got the three segments. There are 3 segments in price action. Now I would be curious to have a look too. I don't even think we came to equilibrium, to be quite honest with you. Maybe just to the tick. So again, what I'm watching now is again OTE, and I'm watching now this price swing, this high to this low. That's what I'm watching. How do we react here? How do we react here? If we want to reach there, right? And then I just mark out what price has done, where price currently is sitting, to see if we continually respect things. In a downwards move, the up close candle should be respected. In an upwards move, the opposite, right? So in an upwards move, the down close candles should be respected, which is why when you have like a breaker block, that's why it's a strong PD rate, because it kind of indicates at a key time frame that something could be reversing. That's important. I don't just go, yeah, I'm going to take a reversal trade right away. It wouldn't be the case. You'd have to see a bit more confirmation of price going up, and then you want to see like the opposite to this, but in the upwards direction. That's what you want to see. Yeah, I'll do this once in a while. I'll do this once in a while, and I'll schedule it too. So on YouTube or whatnot. I've got a few ideas. Be on YouTube or community tab or Telegram, whatever it might be. I'll post some things in there so you guys can have a look at that too. And when I obviously go live, then I'll give you guys a notice too, because not a lot of people, depending where you're from, this might be quite. Well, if you're awake and you're from America, you're pretty dedicated, right? Because it's always 5 in the morning, so I might change the time as well in the future. Maybe do one for New York session, but it depends if I'm awake myself. It's pretty late for me, New York session, so one of those things. One of those things with price action. You can measure out fair value gaps, you can measure out the halfway point. It's not always going to be respected. If it is respected, it just shows that price might want to go lower more quickly. The lower you get in the move from the previous dealing range, the less likely it is, or the less likely I am, I should say, to want to enter the trade. Again, if that's your range, similar thing to what we did back here, if that's your range, that's your whole range that you want to target, and you mark out 0, 1, and then the halfway point, right? So you do something like this. Anything above 0.5, pardon me, that's going to be your premium. Anything below 0.5 here is discount. So above 0.5 is still valid to enter from, technically, if that's your ultimate drawn liquidity, or that's like your dealing range. So the way you trade on the 1 minute time frame is to not be too greedy, trade around these key time frames, and look for repeatable patterns. Look for a mix of inversion fair value gaps, a mix of the both. And then observe price action in these, in these key zones. I think it's important. So it's just interesting, look at what that macro started to do already. We're just mucking around, then it just on the candle. It doesn't always happen exactly like that, but it's a nice little price signature to see. Working from home, trying to see some live ICT trades because it's confusing as hell sometimes. Yeah. If you're just starting learning ICT, guys, or you're a couple months in, you don't need to know everything. I don't know everything that ICT's taught. You don't need to. The biggest, whether it's Andrew NFX or Jade Cap, which I'm sure you guys have heard of, if you look at Jade Cap's strategy, it's not complicated. He's not going, oh yeah, CRT mixed with this. It's not about that. You don't need to know the next new strategy. That's not going to be the the defining factor of what makes you profitable, get payouts. It's a matter of finding something that repeats, and then the thing is, just because you lose 3 trades in a row, it doesn't mean you're a bad trader. It doesn't mean the strategy doesn't work. You get better over time at identifying which market conditions your strategy works best in. That's what you should try and get good at. Not the next strategy, your strategy, keep it. Find out when it works best and when it doesn't work the best. Then when you slowly eliminate the times where it doesn't work the best, what increases? Profitability. You start seeing more winning trades, and that's how you do it. Yeah. Bro, the price is trading in the bottom of a daily fair value gap. Do I keep an eye on it? I'll be honest, I don't, right? I'll be completely honest, I don't. I could have a look at it just for the fun of it, but yeah, I don't, like, for this that I'm talking about here, that I'm talking through, or this trade that I took here, or the Discord that they took this, 15-minute time frame, 1 minute time frame, that's it. If you're trading inside the range. If you are a swing trader, or you want to hold trades all the way from Asian session to the end of London session, maybe you look at the 1 hour time frame. If you want to hold for multiple days, then yeah, maybe you look at the daily and the 4 hour. But for me, this is just me personally, I find it confusing sometimes, because the daily says one thing, this says another thing, the 4 hour says this, the 1 hour is bullish, the 15 minutes bearish, the 1 minute's bullish. oh, I'm bullish and bearish. You know what I mean? That's how I used to have problems. You know, when I used to look at higher time frames. That's just me. How long have I been trading for? Well, ICT last May. Last May is when I started. May 5th. So May 5th was, yeah, I had a mentor myself, and that's when I started the Discord. May 5th, in terms of when I started actually like looking at ICT videos, August last year. And I binge watched them. All the 2022 mentorship, which I'm going to grab that now for you guys, right? This here, and let me just see if I can unblur this camera for you. Let me have a look. Anyway, this here is a book, right? It's pretty much my my notes from ICT. Now, there's pages and pages. I've thought about, you know, making this available for free, but it'll just take me some time. There's 120 pages here. So when you're going on about studying stuff, you have to put in effort, and you have to, in my opinion, not just watch the video, but you have to actually apply it to the chart. So my strategy was this: when I really binge watched ICT, watched episode 1, cool, he talks about this, this, and this. Let me go to my charts and let me look for that, and that. And so I found examples from my charts, put those in my notes too. I didn't move on to the next episode until I understood it. And I'll be honest, the hardest concept for me was the power of 3. I don't know why. Just couldn't get it. Maybe it was how he explains. So I watched other people's videos for the power of 3. That for me took the longest to understand. And yeah, that's kind of what I've done. And then August, learn ICT, finished that in like a week or two. Like every day I was going a couple of hours watching the videos. And that dramatically changed things for me. Put 2 and 2 together. Little price signatures that I didn't really see before, I think was interesting as well. So that's important. Andrew NFX, Shannon. So I'm pretty sure Andrew NFX and Jade Cap, very close to, and there's a couple others too, right? They've had the most, like over $1 million in payouts, I think. So Jade, I don't know what Andrew does, but I'm pretty sure it's very simplistic too. But Jade Cap, if you watch some of his videos and his review videos, it's a very simplistic strategy. You know what I mean? It doesn't have to be complex, is all I'm trying to say. The more simplistic, the better, because you're going to be able to apply that and you're going to be able to teach it. Right? You should be able to explain your strategy in 2 sentences. If I had to explain mine, I would say I'm looking for price to reverse or retrace from certain key levels during a key time frame, and I'm entering off inversion, fair value gaps, or fair value gaps. That's it, to simplify it. Obviously within that there's like branches, but you need like a defined plan that you stick to. You know, end of last year, even middle of last year, I didn't really have a defined thing I was sticking to. I wouldn't say I was strategy hopping, but now when I hop in the markets, I know what I'm looking for. And yes, sometimes I take a loss because I'm seeing the wrong thing. As a human, you make mistakes, but I know what I'm looking for, so when I see it, I'll execute on it. You know what I mean? Or I can talk about it. So this is a sweep of liquidity in OTE. Just watch now how we react after sweeping that. Mostly London Silver Bullet. Yeah, mostly London Silver Bullet. Sometimes, I mean, I'll stay a little bit later. I have been thinking about getting back into New York, but I can't commit. That's the thing. I can't commit to every day. That's the issue. Tuesdays, maybe twice a week, like Tuesdays and Fridays, maybe. But it is quite late. And knowing me, I'd probably want to stay on and keep watching. Because the AM Silver Bullet session's 12 AM to 1 AM, which is not too bad. It's not too bad. But obviously, if I want to stay up a little bit later than that, you know, it's one of those things. One or two things are going to happen here: accumulate and we continue down nice and abruptly, or if we displace past this fair value gap and then return to the fair value gap and respect it, I'd expect these highs to be taken. So I'm just watching how we act in that zone. I'm just reading the chat now. What's my take on OTE? Also, if not too personal, are you able to make a fair living? Well, completely honest with you guys, and some of you guys might know already, last year I worked for a family business full time. So I'm like a teacher or a trainer in Australia. I teach first aid and safety courses. So if you're from Australia, white card and things like that, and traffic control. So I actually had one of my students, believe it or not, that I taught. He's in my Discord now. He might even be in this call. I'm not too sure. I still work for my family business part time to help him out. So for me personally, if you see my previous post, between 3,000 and 6,000 a month is what I've been pulling out from Apex, starting off slow, and I plan to increase that by the end of the year, and then hopefully by the end of this year, I'll feel more comfortable and I'll be used to, hopefully, the 5 figures. That's the goal, right? That's the goal. So for me, I realize that there's no rush. There's no rush in it. So I'm happy doing these small incremental things, and then obviously next year transition, into doing trading full time. But even working part time, guys. I've got a partner myself, and but people work. Like when I've got days off, I'm doing obviously work for YouTube and the Discord. But yeah, you have a lot of time free, so you got to use it in a good way. So whatever that might be for you. So yeah, that's me. And then how long have I been trading? So yeah, since last May, I started learning ICT from a mentor, from a guy. I think he was charging like $200 a month or something. I stayed there for a little bit, and then in August, I watched the mentorship. So my mate, and I don't know, he might be on this call. My mate Jamie, he's the one that got me into ICT. He mentioned ICT, and at the start, I was like, oh, who's this guy? But I'm grateful for that, because if it wasn't for that, then who knows if I would have even looked him up. He probably would have popped up on social media somewhere. So yeah, that's me. Before that, I did try retail trading with crypto. So I'm a little bit into crypto now. I was a little bit more before. Didn't work, because the thing with me and a lot of people is, even people that I know getting into trading that trade retail, is every style of trader, every trader, has a different style. For me, long term it's not it. I can't do that. I would rather be in and out. I'd rather have that quick feedback. And if anyone's watched the round table from, I forgot his name, but it had Bernard, it had a few people, it had Andrew, NFX, I think, and it had a few other people. Everyone's got a different style of trading. So for me, I prefer quick feedback. Like I want to know within 15 minutes, am I wrong or right? If I'm wrong, cool, come back. I don't want to be there for a day managing my trade and having to think about that, while I'm doing things. So that's why I like macros, and that's why I like trading in this session. So we're going to see now if we accumulate and then pop down. So hopefully that kind of expands on what I was saying. So yeah, that's the realistic situation. I'm using Apex 50k accounts. So typically what I'll do is I'll cycle through them, right? Reasons why, because who knows what's going to happen with Apex. I think they're going to be around for a bit, but I don't know. You know what I mean? So, all props to anyone building buffers, but I'm there to take out as much as possible, as quick as possible. And then hopefully next year build a personal account, a bigger personal account, and trade a mix on both personal and props. The 50k is the best, I guess, value for your money. The 250k, it's harder to pass based on the contract sizing you have available. But when you compare the ratio, like a 50k account, you can pull out 2,000 USD in 10 days, or whatever it is, like 20, 30, whatever it takes you. A 250k, you only can pull out 3,000. So that ratio is not equal, because it's obviously 5 times the amount of a 50k account. You can't pull out 5 times of 2,000. So that's why I like the 50s. Cost, not really a big thing. It's more just, value in terms of how it is to pass, and then how it is to get a payout, and combining those two things. Do you mean my Discord? Antor, welcome too. Welcome. So yeah, that's just realistic, guys, in terms of your trading. You know what I mean? It doesn't really matter what stage you're at. So if you're still trying to pass accounts, you got to keep going. I've failed many accounts, like many people have, Any one of your mentors has failed many accounts. Last year, my Forex funds, multiple accounts. So if you're around that time, that was my first account I got. I think it was 100K my Forex funds. Send me a just comment on YouTube, because maybe I don't know what's happening with my privacy settings. I'll have a look now. For Twitter. I'm pretty active though, so like if it pops up, I would see it. I'm always trying to reply to the comments and whatnot. But yeah, depending what stage you're at, if you're trying to pass accounts, you've got to keep going. Were there times last year where I thought, what am I doing? Yes, but I was too deep in. Some people are going to crumble under pressure, and you'll notice that. Hopefully it's not on here, but you might know people that started trading and they're not doing anything. Or you might be in a Discord, for example, whether it's mine or someone else's, and you might be like, okay, well, what's going on here? You know what I mean? What's going on here? Because people leave, people come, people go, which is fine. But even your mates, you know what I mean? They can come and go. Some people just can't stick to it. So my advice is to just stick to it. You're in it now. As ICT says, you're infected with the virus, as he calls it, and you got to stick to it. Many times, last year, many times, I'd sit there and go, what am I doing? Am I ever even going to pass an account? That was the first thought I had in my head. And then after that, I was like, okay, I've passed an account. Now I've blown the account. What do I do now? That's the next stage. I've passed the account. I've traded on the account. I've got a payout. Okay, cool. I've got another payout. And to be honest, there's no end goal. So you take each day as it comes, because there's no end goal. For me, the goal every day for me is to take quality trades. That's it. The payout will come if I perform. It won't come if I don't perform. Same with you guys. So that's it. And you're in control, right? You're in control of pressing that button. So it's one of those things. All good, Shannon. All good. It's one of those things, right? No matter what stage you're in, you've got to keep going. Just because I have gotten payouts, over the past 4 months with Apex after 12 months, doesn't mean you have to. It doesn't mean you can't do it earlier. It doesn't mean that, because everyone's different. You might have put in more time than me, less time than me, who knows? Everyone has different learning abilities. It's different. Everyone has a different worldview and different experience before trading, which might help them or hinder them. Everyone's got a different personality. For me, it was the psychology that held me back. For a long time, the strategy was there. The psychology was the issue. For other people, psychology is beautiful, but they can't understand the strategy. It's a balance, right? And this is that option, right? On the screen here, watching the charts, this is that first option, right? Accumulation, expand. You get that, right? Accumulation, expand. Accumulation, expand. And then I think I marked this up before, like ages ago, right? For anyone that's just joined, this previous rate and liquidity, what I did like a standard deviation projection. It measured up with that bullish fair leg up there. So let's go 2 to 2.5. Oops. Yeah. Just saying, right? There's a swing low there too. Interesting. So I'll read these messages. If you post some messages, I'll read them out. All right, so there you go, good stuff. So having a look here, 15 minute, yeah, as your bellwether, daily time frame, 5 minute for models, 1 minute and 30 seconds. Yeah, 15 minute is my beautiful chart. I love the 15 minute. Because like I said before, what I used to do, I've got old videos. If you, you can look at my YouTube, but I've got old videos, right? Even just me recording where I'll be like, right, I'm doing, a top-down analysis. I'll be talking to myself. All right, on the 4 hour, we're doing, yeah. I used to do that. And I said, wait a sec. If I'm trading a session, if I'm trading 30 minutes of a session, why do I need the daily? The only time I use the daily or the 4 hourly is I might just randomly go, okay, I want to have a look at it. And maybe we're sitting at a very key level of that zone, like the halfway point of a fair value gap, then maybe I'll look at it. But To be honest, last week I didn't look at anything apart from the 15 minute and below. Nothing else. So for me, yeah, exactly right. So like I use that as like the bell of the chart, and then for me I use the 1 minute and 30 second for entries. I'll look for key, and this is something I'll talk about on YouTube too. There's so much information on YouTube already, but this is where like I'll look for key levels that price could react from, key time zones, whether it's macros or silver bullet, London open session. I'll look for key price signatures like this. These are key. I don't know that it's going to accumulate and go down, but it's one option that could happen because I've seen it like happen, time and time again. So I give myself options. I give the market variability, and then based on what it actually presents, then you can execute. Like for example here, it's not the cleanest, but yeah, like you come up, you sweep liquidity, you inverse this, bullish gap. That's a good sign. What do you expect when you inverse this? You should take out this low. What do you expect when you take out low and displace lower? Well, you should at least feel this imbalance. If you disrespect that, what do you expect? Well, you expect at least to feel this imbalance, then obviously this becomes the next sell side if it wants to reach there. It doesn't have to. And then this imbalance. What would make me think that we're not going down here? If we aggressively inverse this fair value gap, I wouldn't think we're going down anymore. I think we're going back up, at least back into equilibrium with this range. Eventually we could go down, but again, like that there's enough, that there's enough, that there's enough. Consistently, that's all I've been doing on Apex. That's all I've been doing. Right, the first two payouts, I'll only make 200 to 400 bucks a day. That's it. Recently, I've been trying to extend that a little bit and make my average winning day anywhere from 200 to 700. Like the range is a little bit bigger, ideally 300 to 700. All that does for me is it allows me to reach that buffer zone quicker. That's it. And then once you reach that buffer zone of 2600, obviously the trailing drawdown isn't an issue anymore. Life's easier. You've got more flexibility. So there's a strategy to it. I'm going to read the questions now. So about Apex, I passed 250k. Yeah, but I can't withdraw the whole amount. Max I can withdraw is 3,000. But if I pull out 3,000, that's still alright. So as long as you follow the rules, take out. Actually, no, I can't say that. I'm not a financial advisor. Don't do anything I say, right? But if I was in that situation, let's say I got a 50k account, or say I traded at 250 and I made the buffer and I went for a withdrawal, I would take out three. Yes, it only leaves me at 3,300, but how many accounts could you buy with 3,300? You know what I mean? How many accounts? And you gotta weigh it up. So what's more important? Would you rather leave money in the account, and this would be a personal decision, leave money in the account, and I'll read these comments as they come through. Would you rather leave money in the account and then something happen with Apex, or something happen with your trading, or would you rather take the money when it's there? And that's your decision. For me, I'd rather take the money when it's there, and then that money can be reinvested into other things that bring in money, or reinvested back into a business of some sort. So that's what I do. It depends, because it depends on your situation, right? It depends on your situation. If it's your first one, I would on my first payout, like I did, I'd take out the whole thing. I would. If you've had multiple payouts, depends on your strategy. Some people want to build buffers, and that's completely fine. Other people want to cycle through, that's completely fine. Depends what works best for you and your lifestyle and how much you can afford. That's also another factor too, If you can't afford other accounts, by all means, take little portions and then keep the account. That's that's what I'd say. And KVRL, yes, and yes. I'm glad to hop on live. I mean, depending where you're from, it's too early. The audience, I've got a lot of people from South Africa. And a few people here said they're from South Africa. South Africa, Australia, and the United States are the most prominent. I just want to share those in the trade from Moss all the way to the top. I got stopped out when the move started at 448. Yeah, that's understandable. But it's good, right? Journal these things down, you know what I mean, when you're looking at these trades. Really important, really important. Use this opportunity, because I'm not saying, like, I will do another live again, but I don't know when. Just depends, right? Most likely be like on a Monday or Friday, I'd say. Or if I ever do one later on, you know, could be New York session. The thing is, I don't trade New York session personally. I don't personally trade it. So my Discord is like focused on the London session. Even around this time, you can trade if you want now. Like, I had a guy that did my mentorship when I had that active, and he was at work. Like, if you're from Australia, right now it's like 7:30. He was working till 5. Or 5 or 5:30. He's like, when I get home, by the time I drive home from work, get home, have dinner, like, silver bullet is ended. What do? You can still trade. Use macros. I've found you. I'm just having a read. Found you 2 days ago. Also been trading for 10 months. Find a top step. Yeah, man, 100%. Send me Send me an email. So I'll put my email in the description. What I do want to do, which is what you guys also voted for, I want to have a little virtual podcast with other traders. You know what I mean? They don't have to be trading ICT, but I just think it'd be interesting to talk to people, not only from Australia but across the world. So it could be of interest to you as well. fullviewtradingaus@gmail.com. So if anyone that has like questions that can't reach me, that's my email. Feel free. Welcome. Alrighty, so yeah, well, exactly. That's the thing, yeah. 2,000 US is about 3,000, AUD. With 3,000, so for me, I recently just moved out, I'm into a new place. Those payouts help with those things. That's what you don't have to use it for that, but for me personally, that's what I do, and then I reinvest some and save some too. Because you've got tax, right? So depending how you structure it can be a little bit different, but you just got to keep that in mind. You're from South Africa, yeah. We got a few, like I said, from England. Yeah, so on Discord, those in the platinum, we usually go live for about an hour from 3 to 4, silver bullet. Sometimes, usually it's a Friday, I might stay a little bit longer. Depends how the market is. Like, if the market's interesting, like this is interesting and so is this. And I'd be curious to see if we range up and down, because I don't mind those conditions. Like the typical seek and destroy where you go up, down, isn't too bad as long as you're scalping the markets. Do Apex allow full payout or full port? Full payout, you can take out 100%, right? If you're talking about full port, I want to do it. But yeah, you can withdraw 100% of what you make as long as you're above the threshold. So the threshold is obviously different depending on what size account you have. And you need a minimum of 10 trading days. You can flip 2 of those days, which means you just go in and out. So technically you need 8 trading days and you need to be above 2,600 on a 50k account. That's kind of what it is. From South Australia. Nice. Yeah, I've never been to South Australia, to be honest with you. Wouldn't mind going there. Queensland. That's pretty much it. ACT. Victoria, I've been. Yeah, I would like to trade New York session again. I would, personally, but it's just the times. Sleep's really important to me. It's good having a schedule. Has a big impact on a lot of things. Because I used to, in Australia, if you're from Australia, right, when times go back, the AM session used to be from 2 o'clock in the morning to 3. So what I used to do, I used to trade London session, and I remember this, right? I used to trade London Forex. This is when it happened. London Forex, chill out a bit, go to bed about 10 o'clock, wake up at 1:30, trade from 2 to 3, stay awake till 4 because I couldn't sleep, go to bed, and go to work. Not ideal. So that's when I stopped. The circadian rhythm was impacted a little bit too much. And yeah, send me an email if anyone has a question. Like, you can't get to me, send me an email. That's fine. And Michael, yeah, potentially, like if we're in a little bit of a rangy day here, we could potentially just swing. All these accumulation pockets could be a target when we move back up too. Keep that in mind. Because that could be original accumulation. They all are targets. And so far, it looks like we're accumulating, moving down. So as soon as you have an impulsive move that breaks that, then I'd probably say we're moving up. And we're about to enter the 2 to 2.5 standard deviation, so I'd be curious to see what price action does in that zone too. But the thing is, if I pull out 3,000, that's alright. I mean, a 3,500 buffer is enough. It's more than enough. More than enough. Just reduce your risk. Pretend you're trading them, because the thing is, you need to make like 6,600, right, to be above the threshold. Take a month to do it. Because what you got to think about is, like, if you get a paid every month of 3,000 or 5,000 Australian dollars, it's a decent amount of money. It's more than most people make from their job, right? So focus on a monthly perspective, and day by day, make those small goals and have those small achievements. I think it's a good thing to do. Do you only trade NQ, or you see where the price? I just trade NQ, man. I just trade NQ. So sometimes I look at ES to see if there's any like divergences. When do I look for divergences, you might say? Like if I'm very close to a target and I'm like, oh, it looks like it's reversing, I'll probably, and this is interesting here, I'll probably say, I'll probably look at SMT. If I just had like a 3 drives pattern or something, I'll probably look for SMT, see if there's anything there between the two. Like I'll look for these things, and then I'll wait for something to be respected or disrespected. I'm just watching, I'm just seeing what price does. And I just mark things out, and then what I do, I just watch to see what happens with price. And then if it does something based on what I think, then I'll look a bit closer. If not, kind of just chill out. What do I think of Asia and London equal lows? Yeah, they look pretty nice. They look pretty nice. We might work our way down there. There's some lows here. I mean, here there's some lows here too. That is technically all low resistance as well, highs. I'm losing it. But there are like relative equal lows here too. There are relative equal lows there too. These ones here, highs and lows, treat that as a range. I reckon both are going to get swept at some point. But when are they going to get swept? It could be today, it could be tomorrow, it could be the next day. So I don't know that. I don't exactly know that. I am curious though to see, again, this has been marked out for ages, this 2 to 2.5, what happens here? If nothing happens here, I'd expect price to go much lower. If it does happen here, then it might be good to go for a little scalp to the upside, I reckon. So yeah, I'll trade any day. But, here's the key but. Only if there's something there. So, it might be Monday after NFP, which is meant to be a crappy day, a really bad day. But, I'll still trade it if the price action's good. NFP news day, sometimes it's really bad. Like it does this all session like this. Like does nothing all session. I can't trade it. But if price action is nice, then I'll trade it. Same with CPI, same with PPI. If you're in New York session, when I used to trade New York session, they're still tradable. But you need experience because you can get wrecked on those days, which is why ICT and other people say don't trade NFP, don't trade CPI, don't trade PPI. It's safer if you don't. Can you still trade it though? Yes, but you need experience to manage, I think, is the most important thing. So that's news days. No news days. I'm losing it, mate. I'm losing it. No news days. Yeah. So I think I explained that too. Like, no news Mondays, for example. Still tradable. Still tradable. But you just gotta see, like, you gotta see it from both a small picture and then a bigger picture too. And that way, right? And that way you allow yourself to take trades. Be flexible, because if you only have a long bias here and you're only taking longs, you can't take this short. If you only have a short bias, you might miss out on the long, and then there's your silver bullet, and I'm not going to take a trade. So have flexibility. For anyone that's like interested in that, have flexibility. I think it's important. Yeah, cool. Got the email as well. So we'll have a chat. I do appreciate that, Jordan. Yeah, I mean, that's my whole goal. Whether it's YouTube, whether in my Discord, or whether you've been a mentorship student, or whatever it might be, that's my whole goal. You know, people give you information that's not relevant. Maybe it's a marketing thing. What I really tried to do, whether it's on my YouTube channel or whether it's Discord or this course, right, that I'm releasing, I'll probably release it tonight. All these things, right? I want to provide actual information that's going to be beneficial. That's my goal. And then simplistic as well. You don't need to know everything, right? You don't need to know much to be profitable. But you do need to be willing to consistently improve and accept that you're going to be wrong. Because you're going to be wrong. I'm going to be wrong. How well you can accept that makes the massivest difference, the biggest difference, I think. Any tips to have more confidence that fair value gaps opposite on a trade won't be respected in reverse? So, value channel, any tips to have more confidence that fair value gaps opposite to my trade won't be respected in reverse? Time and a clear draw on liquidity. That's what I'd say. So I reckon this is gonna, if we close like here below 2.5, like down here, I reckon it's gonna go lower. We'll see what we do. But you have to have time, macro, silver bullet, and you have to have a clear draw on liquidity. So you need three things. Price and time obviously needs to be aligned, which is, it's crucial. You need a narrative and you need clear targets. The clear targets should make you have confidence in that. And also by getting chart time, because you see things repeat, you go, oh yeah, I've seen that before. And then that gives you more confidence too. So it's a mix. And yeah, that's it. And I'll read both. Sometimes you do everything right, but you end up losing as the market changes. That's it. Like, my macro strategy doesn't always work, and then any other strategy doesn't always work. And that's why I said, like, you've got to find out when your strategy best works in the market. That should be your focus. Because then if you can eliminate trading in certain conditions, like, for example here, your strategy might not allow you to take longs. Cool. Or your strategy might not allow you to take shorts. Anyone that took a short here, a long here, a short here, it's completely valid. They're all great trades. All fantastic trades. There's nothing wrong or right about one or the other. But different systems have been applied in those different circumstances. So that's what I'd say. Get good at doing that, and that'll completely change the game. How do you get good at doing that? By having chart time, by taking losses, so you know what doesn't work, and by taking wins, so you know what works. Journal your wins, journal your losses. Focus on what you want to see, not what you don't want to see, and that'll really change the game for you. Will I take an entry outside of the macro? Yeah. Yep. There's different reasons why, right? To put simply, I use what the previous macro does sometimes to enter out of the macro, like outside of the macro. Or on those really weird news days where you got news, you can't expect time to always be on point. So there can be like external manipulation with price, I think. So that's what I'd say. And again, if you guys have questions, let me know. Send them in the chat, it's completely fine. I'm just watching this area. I'm just watching that area. It's important to me. Watching price action. So if anyone's keen, I want to start like a little series. Talks with traders. it'd just be interesting to have a chat to people. So if you're a trader and you think you'd be good, you've got to obviously be able to have a conversation too. Talk about your strategy. You don't have to give away too much if you don't want to, but have a chat, and because everyone faces similar things. The guy that got me into trading, you might be Jamie, we face similar things. We've both grown at our own rate, different rates, which happens, right? Everyone's different. But as traders, you face the same thing. Everyone has emotions. Everyone has, bad days, good days, winning streaks, losing streaks. Different severities based on how well you control yourself. That is true. But it happens, right? Yeah, I don't mind a nice wine. More of a red wine type of guy. It might be weird. Just don't really like white wine. Every bearish PDRA I'm marking, it should be respected. Should, if we're going to continue lower. So, yeah, like I said before, guys, depending on what stage you're at, you just got to stick at it. You got to stay consistent. It's a weird thing. It's a weird thing, It's just a weird thing when you get a payout and you get another payout. You realize it's possible, but I was exactly where a lot of people are right now, maybe watching this, where you don't believe that you're going to get there. But think about how much work you put in. It's not worth it. I've been to university myself for 3.5 years. And think about that. Like if you've been to uni or TAFE, or if you're from overseas, I don't know what the system is there, but to get like a construction job or whatever it might be, you might have to learn for 3-4 years. If it takes 3-4 years of trading, it's a tuition. You know what I mean? It's tuition. In my opinion, can you speed it up? Yes, I do think you can speed it up. How do you speed it up? You have to put in the time. And getting someone to help you understand things, whether it's my YouTube channel or whatever, that also helps too. Like if you try to figure it out all yourself, it can be tricky. So whether it's free or paid resources, free or paid, doesn't matter. Both are extremely valuable. That will help you increase. And there is enough on my YouTube channel to build a model and be profitable. Nice. That's nice up there, yeah. Nice up here somewhere. So if we do keep going down, this is what I'd expect or anticipate. Eventually we're going to move up, and what are we going to target? Those highs that you mentioned, whoever it was in the chat. So we're going to leave those for later on, but there'll be a draw on liquidity later on. So if you're trading later on in the session, if we still haven't gone up yet, you're trading New York session, maybe could be something. could be something to keep in mind, right? Could be something to keep in mind. It's just interesting to read price, right? Really good day. I say this pretty much every day, but this is a really good day to go over. I say that to my Discord because, you're looking at price here. Look at how it's expanded. Look at how price has expanded. Interesting. Yeah. So, yeah, when you guys are looking at price action, whether it's macros or whatever it might be, you don't have to trade macros if you don't want to. It's just what works for me. Just find something that you can repeat, that's repeatable, that's simplistic to implement, that you could teach to whoever you want, right? You should be able to teach your friend or your parents or your grandparents, whatever, a relative, cousin, auntie, uncle, and they should be able to understand it. That's what you should do. So if you've got a partner, you can use them and see if they understand what you're saying. To a degree, right? Obviously to a degree, because if you've been learning, concepts, you're going to have a lot more understanding. But the basic principle, right? The basic principle. Now I'm going to consider the OT of this range from this low to like this high, which we're probably digging into about here. This could be accumulation, right? Would you agree? This could be accumulation. So you might see price action come all the way down here and react from the accumulation. Could that be a market maker model? Of course it could be, but everyone's got a different definition. Like some people say that's accumulation. I say, oh, not really, but it could be. There's no right or wrong answer. It's more about if you see it and there's reason to believe it and you've seen these things repeat, you do it. You take the trade. That's the most important thing, I think. So I'll probably stay on for another 5 minutes, guys. If you have questions, send them through. Send them through now. Or you can send me an email. My email's there. Just fullviewtradingaus@gmail.com. Right, later on I'll post a link to the course of the Discord as well. That'll be all releasing. If you want it, right? If you want it, if you have any questions about it, send me an email. That's fine. That's fine. It would be viable. It would be viable that the next macro push down further or reverse. Yeah. There was something similar to this. Yeah, there was something similar to this last week. Oh, it might have been Tuesday. Don't quote me. But something very similar to this last week. So this is where, like, look at this. This is where a lot of people don't short. And fair enough, that could be a rule. That could be a rule. Nothing wrong with it. Why might price reverse when you don't think it should? SMT. There's no SMT there, but there's SMT there. So that's why this inversion is good. That's interesting. So yeah, for me, this was the trade that I took. So let me just go here. And if you're in my Telegram, I've got like a little recording of that too. So check that out. It's just like a 1 minute video. Anyway, there's a macro at the bottom here. That's 250. 310. Price came back up, swept internal buy side. We came super close to these lows. Originally they were the draw, I thought, but we retraced, which is interesting because that still becomes the draw, right? So it still exists. We retrace back up. Let me just get up my OTE. We extend a little bit past it, but roughly, look at this. Roughly we stop in that zone. Like we poke out with one candle. I'm going to zoom in here. We poke out with one candle. The next candle straight away rejects. Then we created like an inversion fair value gap here. Now I was looking at different time frames too, like the 30-second, but unfortunately the entry was quite late because on a 30-second time frame here, where are we? There's a 30-second fair value gap that gets technically almost inverse there, but it wasn't enough for me. I wanted to actually see the candle close. So I went back to the 1 minute and then it started to accelerate, right? Entry came here. It was something like this, right? Stop above that high, right? TP at that low. That's what it was for me. So it was more than 10 handles. Why was it more than 10 handles? Because I was only in with one contract. I was waiting potentially for price to retrace. It didn't retrace. Because of that, because we had relatively good lows, I thought it was only fitting to take the profit there. And it's all in Telegram. Like you'll see it. That's the trade I took. Only one contract. Right, so I think it was like $300 to $400, give or take, on that trade, which is a base hit, which is satisfactory for Apex. That's what I'd say. Other people in the Discord took a short here from that inversion. They took a short, and I think some people took about 10 handles off that. Just a little scalp. That's cool. You trade live in Discord. I do something similar to this. And we mainly focus on the macros. Like when we're looking for things, we're looking at macros. That's what we're looking for. So I might stay on for a little bit more. I might stay on for another 5 or so minutes. I just want to see how this macro kind of opens up. And we'll do silver bullet. So we'll go 3 to 4. What I do on the Discord, most days, not all days, but most days from 2 to 3, I'll post like text analysis, sometimes photos, videos, just saying like, look, if we sweep this and react, it wouldn't be a bad time to go for a short or a long. It's not meant to be a signal group. That's important, because I don't believe in that. I think it's important to give people the information, but it's really important to obviously, like, doing stuff like this, right? You're talking through it, but in terms of like giving the text analysis, it's just there to support people. So maybe you're looking at a similar thing, you go, oh, there's someone else that thinks the same thing. Maybe it's, might be a good idea. But if you don't say the same thing, even if I say something, doesn't mean you should take a trade. And I say that to people in the Discord too. That's really, really important, I think. Yeah, it's all good. What's your question? And hopefully that answers your question too, Wesley. And PJ, I've got the email, so I'll get onto that. So any last questions, guys? Send them through. It's 5 minutes. In about 5 minutes. I just want to see if we purge this. I'll probably call it. This will, by the way, this will be uploaded probably automatically on YouTube. So it'll be automatically uploaded. And again, if anyone wants to send me an email about something, there you go. Yeah, that's it. A big part of being a successful trader is you've got to be able to think for yourself. Getting someone to help you see things is not a bad thing. It's not a bad thing. But then being able to apply yourself. It's beautiful when I see people in the Discord take the same trades as me. It's beautiful. I love it. Because if I can help someone see something in price action, that's what I want. Yeah, it's more than enough. All my payouts with Apex have been done through trading the London session. I've never, gotten a payout trading the New York session. Hasn't happened. Only because I stopped trading the New York session, right? Could I trade? I would be curious, but it's just the times. If I leave somewhere different, it might be a different story. It's a real big movement there. It's like almost 100 handles. But that's your Asian lows, by the way. These are like Asian lows. And these lows here. Make 200 to 300 bucks a day average. Yeah, it's fine. Make those basics, you know what I mean? It's always a good thing. And there, the accumulation's pretty much swept now. Some equal lows down here too. And yeah, I agree. Like the New York session's definitely more volume. The quicker, the faster. I didn't struggle going back to London, but I always thought to myself, is it enough? I thought the same thing. I thought, will it move enough? And I think I had to slightly adapt my style, but not too much. You know what I mean? Like, aim for low-hanging fruit, adjust the handles that you target. But it's all relative because, you trade with less risk in London session probably with the same amount of contracts. In New York session, yeah, it might move quicker, but it could move quicker to your stop loss too, right? So there's two things. And to have the same price action, like if you had this in New York session, say you're entering off this inversion, your stop loss here is like what, I don't know, about 6 or 7 handles. For New York to have the same structure and price, it might be 20 handles or 15. That's all relative, I reckon. You never know. If I come up to the Gold Coast, you never know. I haven't been to the Gold Coast in a long time, but it'll be something interesting. There you go. Trail it down. I'm going to call it there, guys. It's been a pleasure coming live. And again, later on, I'm going to post the link to the Discord, to the course, to my Telegram. I'm going to post that on the YouTube community tab. My email is there for anyone that wants that. Or yours, yeah? If you have questions, just send me through. So I've got PJ's, I've got you two guys, right? And obviously, yeah, KVRL, I've got your email too, and we'll have a chat. And yeah, if you got questions, I always reply to your stuff most of the time. If I don't, just comment again because I'll probably see it. Got a few videos planned, right, coming up. It should be very helpful for you. And again, study macros. That's what I do. What I did, and I still do. I still do. I'm still on. Like, the thing is, I used to just hop off, which is a good thing sometimes, but for me, I like the chart time. I like seeing things repeat. So I dedicate I might even still work. For example, today was one of those days I worked for my family business, full-time 8-hour day, but you put in the time. You have to put in the time. You have to see things repeat. It's just a part of the process. Just learning. Chill out with it. Take your time. Have patience with it, and then you should be sweet. Appreciate you guys joining. And we're growing, which is good. Keeping it tight knit is also a good thing too. You know what I mean? It's also a good thing too. So this will be uploaded, I'm assuming, just automatically from YouTube. And yeah, until next time, guys, I will talk to you then. Again, send me an email if you want to send me an email. If you're in my Discord, send me a message. But if not,